this fundamentally points to a demand issue in China, and that's really why we've seen the export valve used in the way that it has. If we look at just what steel product exports have done so far this year, it's up about 10% year on year in the first half of this year. But if you then look at what it is every month, it's actually come up above 10 million tons being exported. Now, the last time that we were at these levels was back in 2015, and unsurprisingly, this is when anti-dumping became a concern as well. So even if we look at the last year, we have at least 30 cases of anti-dumping against China. That compares from 2020 to 2023 of just 15. So where we are right now is very much symbolic of a demand problem in China, translating through to exports being a release valve for production. And until we fix that problem in terms of demand recovering, but even supply side reform coming into the mix, we're going to have this anti-dumping thematic playing out around China's steel neighbors.
Are we seeing the government intervention that we need, or is this really the result of market forces?
So look, in terms of what was done from 2015 to 2018, it was a concerted push towards supply side reform. And when we look at what has been announced since the beginning of July, that has certainly been the case. You don't have to look far to see a rally across a number of commodities, but you look at the sectors where you really had margin crunched because of oversupply and structural oversupply concerns, we have seen prices pick up quite a bit. Like if we look at, say, lithium spodumene, we look at coking coal futures, we have seen at least a 20% rebound since the beginning of July. So we are seeing like prices rebound on hopes that the structural reform is there, but this is going to be really critical to watch. If we focus in and hone in on steel specifically, in May and June, for example, we've seen China's steel output fall in annual terms about, that 6 to 10% range. And that really tells you that they are looking to curb overcapacity. Now, that's going to be really, really critical. But so far, from a steel point of view, it is working. Steel mill margins in China have turned positive. And I think that's a really good sign that people believe in the reform and nationwide buy-in is there to reduce steel output.
How effective, or what is the significance of all these anti-dumping investigations, the latest coming through from that of Japan, joining a number of countries with such investigations, the impact on China? Does it do anything?
Look, if 2015 is anything to go by, it actually is not about the anti-dumping, the investigations, because there will be workarounds. And if we look at even the last year of anti-dumping claims against Chinese steel, we've still seen exports rise to start the year. So for me, that's not going to be critical. It's not going to be how you deal with the trade. It's going to be how you deal with the structural reform in China and how you then deal with the demand side. Because as you mentioned, structural supply is just one part of the problem. The other part is how do you kickstart construction? And a big part of that, which has really been a weight since 2020, has been the property sector. And so long as this is hemorrhaging and this is not recovering, it is very hard to see how we can see that demand story materially improve. Like all we're talking about is stabilization. But if you look at new construction starts in China in the first half of this year, we're down about 20% year on year. And that just tells you that your most steel-intensive part of the property construction process is still negative.
What about news of China building the world's largest hydropower dam in Tibet? This is going to be a construction project that will last well over a decade. We're not expecting it to come online until the 2030s. What significance does this have?
So look, I think markets got excited about it probably too much. Like, as you said, the timeline is significant and it's one infrastructure project. Yes, it's a mega project. But in terms of where policymakers are going, you can see that they are looking at building out infrastructure across the west of China, which is probably where it's needed and where infrastructure has real gains to be made. Given the east side, infrastructure investment, the returns will just be much lower. But in terms of is this a signal of more stimulus to come? I think that's a little overblown. Like in our view, if we're really talking about when will China enact any stimulus to ensure that it gets to around 5% growth this year, our expectation is more towards the end of Q3, start of Q4. And that's really underpinned by first, the first half performance was solid, 5.3% growth in the first half. And the second is we only know what the US-China tariff settings will be after August 12th. And I think that is really the window in that late Q3 where we'll have Chinese policymakers knowing exactly what they need to do to get to that around 5% growth for 2025. So we're watching that space very closely, but I think it's very premature to look at what was announced over the weekend in terms of that mega project and say stimulus is imminent right now. I just think there's too much positivity so far in the first half results for policymakers to worry about imminent action.